Hello, I'm Dave Rakowczyk with Coldwell Banker Barnett and davidrhomes.com, where you don't just find a house, you find a place to call home. Today I'd like to talk a little bit about ways you can maintain and build your credit. Why is this important? Whenever you build or maintain your credit, it's going to get you better interest rates. It's going to improve your buying power, and it'll actually do other things for you, like actually get you better insurance rates. So this is a really important subject, and these are just a couple of things that'll make a huge difference. Let's talk about maintaining your credit first. Here's a couple of quick things you can do that will make a difference. First of all, check your credit. Check the 3 different scores with the 3 different credit bureaus that are available out there. Those credit bureaus are Equifax, TransUnion, and Experian. These are the 3 major reporting agencies that all banks and all creditors are going to be using to pull your credit information and to find out more about you. So when you're checking those credit bureaus, if you find that you have derogatory information in there, or let's say that there's somebody that has a similar name to you that keeps screwing up, you actually can contest that information and have those credit bureaus remove it from your credit profile. They might have your same name, but they don't have your same social security number. Unfortunately, sometimes it still does tie to your credit, so you do need to go in there and check that, especially if you have a common name. Another tip, do not go and close any of those old credit card accounts that you've had for 5-10 years. This will actually have a negative impact on your score. Having those long histories on those old accounts is actually good for your credit, whether you're using the card or not. So make sure you keep those open. I also had another client that actually went in and did something that I don't suggest, which is he went in and decreased his available credit limit. He thought that by reducing the amount available on his credit card that he was being more responsible and showing that he had restraint to actually pull the limit down. But unfortunately, that shows negatively on your credit score. You actually want to have higher limits. You don't want to go in and continuously ask for an increase on your available limit, because every time you do, they will pull an inquiry on your credit score, which will actually drop your rate a little bit. But you do want to try and max those out. So if you get a pay raise or something along those lines, it's a good opportunity to raise those credit limits and try and increase your score. You want to make sure that you're only using 50% or less of any credit card available limit. Once you go over that 50% mark, that can have a negative impact on your credit score. As far as maintaining your credit, you need to make sure that you make every single one of those payments on time. Now, on time means less than 30 days late at any time. You're going to get penalties if you're late even a few days on some of those. So it's ideal to actually pay those ahead of time if you can, before the due date. But the big kicker with credit scoring is always the 30 days late. Once you hit 30 days, that will have a negative impact on your score. And so you do want to make sure that you set up automatic payments or some type of system to make sure that you don't miss anything more than 30 days. That will have a really positive impact on your score if you make sure that you always pay them on time. Next, ways of building credit. If you don't have credit so far, first thing you can do is look at doing something like a secured credit card. There's a lot of banks that allow you to do this. And it's a great way to get things started if you have no credit at all. With these secured credit cards, you put about $300 or $500 or sometimes $1,000 into an account with a bank, and they turn around and give you a credit card that you can access that money with. However, you're still borrowing the money, even though it's secured, so you will have to pay interest on it if you don't pay it off every month. My suggestion would be use this, build some credit for 6 months or a year with it, and then close. That's the only credit card I would close out, but close that one out after you've started establishing some credit or you found some additional ways, because those can be costly, and again, you're borrowing your own money at a high interest rate. So secured credit card is one option. A cosigner is a second great way to start building some credit, because we're going to be depending on somebody else's credit to actually propel you forward. So what they can do is they can cosign on a loan, like a car loan. That would be one great way that they can go ahead and back you up. It has to be somebody that really trusts you quite a bit, because if you default on that loan, it will affect their credit as well. So typically, you don't get a lot of people that are willing to do this, but if you can find somebody, it's a great way to start building your credit. Another great way that you can get things going is through a collateralized loan, or essentially using something that the bank calls a secured loan. You have somebody that provides an asset that's equal to or more than what you're borrowing. Great example would be maybe, again, your rich uncle that has a large CD, says, hey, you know what, give this guy the loan, we'll use my CD as collateral. I don't want to be on the loan, but you can have my CD as collateral for this loan. And so that way the bank feels secure, and you can start building credit directly that way. Okay, another great option is going to be go into some of these department stores or gas stations and look at starting a credit card with them. A lot of times, if you don't have a lot of credit history or if you have very minimal credit history, they will help you out and they'll help you get started, but they'll give you very small spending limits like $300 or $500 or $1,000. But the big thing is, again, keep those open, use them, pay them off every single month. It'll be a great way to start building your credit up a little bit more once you have something started. Last one is one that I'm really kind of fond of. It's how I actually started my own personal credit back when I was 18 years old. It was something that a banker and I had kind of put together. They said, well, you know what, we need a collateralized loan if we're going to give you any kind of credit start. And one great way to get your credit history started is with an installment loan at an actual large financial institution. They're actually rated higher than a credit card. So you can look at doing what's called a CD loan. Most bankers have not heard of it, but I can show you how you can actually structure it and get it done. It's like having a forced savings account, but at the end of it, you actually have really great credit started as well. But imagine this, you have $5,000 that you're asking to borrow, and then you want to put it immediately into a $5,000 CD. Then you use that $5,000 CD as collateral for that loan for $5,000. So what does the bank have? Well, they loaned themselves $5,000. Essentially, they have a loan and a CD, so they're not out any money. To you, you have a monthly obligation for 12 months or 24 months. You pay money into it. You're paying a little bit of interest on the loan. You're getting a little bit less interest on the full CD amount the entire time. The loan balance is going down, the CD balance is staying there and growing slightly the entire time. So the amount of interest that you pay between the two really isn't that much of a difference between what you're paying and what you're gaining. But the nice thing is you're building a solid credit profile because you have an installment loan, and then also at the end of it, you have a $5,000 CD that's matured, and now you're ready for a down payment for whatever it is that you want to purchase. It's a great option for starting off in building your credit. Last note, if you had damaged credit, let's say you had either a bankruptcy, you had a foreclosure, you had done a short sale in the last few years, and you're thinking about how can I restore my credit? Obviously, some of these things that are on the building credit side you can do. And the other big thing is there are some credit restoration companies that we do know of and do work with. And if you're interested, I can point you in the direction of some of them that will help you rebuild your credit faster and stronger, so that way you're in a really good position to take advantage of some of the better interest rates that are still available. So just to recap again, why would you want to build your credit? Why is it so important to maintain it? You actually get better interest rates on things like car loans, which are big purchases, house mortgages, which are again your big purchases. Also, your insurance rates are going to be less. It makes it easier for you to get approved for a lot of different things by having good credit. And so hopefully this has been helpful to you, and if you have more questions, please feel free to call me at the contact information right after this video.